Okay, welcome back. Today, we're doing a deep dive into Central Depository Services, India, limited to, CDSL, Asia's first listed depository, a really foundational piece of the Indian market.
Absolutely, a major player.
We've got their latest results, Q2 in the first half, H1 ending September 30th, 2025. That's for the financial year FY25-26.
Right.
And our job really is to cut through all these reports, the tables, everything, and pull out what actually matters for you, the learner. What's the real story behind the numbers?
Exactly. And just to set the stage, the auditors, SR Batley Boy & Co., LLP, they gave an unmodified opinion on both the standalone and the consolidated results.
Okay.
So, clean bill of health on the reporting itself. That's
Yeah.
important.
A solid foundation, then. Now, the immediate thing that jumps out, the hook. This company's just, well, an engine of growth. They hit this massive milestone recently.
Oh, yeah. Operationally, it's quite something.
Let's get straight into that, the operational side. The huge headline. CDSL is the first depository anywhere to cross 16.51 crore demat accounts as of September 30th.
16.51 crore. That's 165 million accounts. It's almost hard to picture.
Right.
You're talking about managing the financial assets, the securities, for a population that's like bigger than most countries. It really shows their reach in India.
And it's not just the total number, it's the speed.
Sure.
The sources show over 65 lakh new accounts just in Q2.
Yeah, 6.5 million in 3 months.
It's incredible.
It is. But, the question that raises is sustainability. How many of these are active? What's the average value? That explosive growth is great, but is it translating efficiently,
That's the key tension, isn't it? We'll come back to that with the financials. But sticking with operations for a second, the value held is enormous, too. DMAT custody value.
44,011 lakh crores.
44,000 lakh crores.
Yeah.
Which is about, what, 5.3 trillion US dollars?
Roughly, yeah. A staggering amount. And they're servicing, almost 114,000 ISINs now?
1,013,909 to be exact.
Right. So the scale of the operation, the infrastructure, it really cements their role. They are critical market infrastructure, the plumbing, essentially.
Okay, so the operational side is booming, scale is massive. Let's connect that to the money. How did this translate financially in the first half, H1 FY26, compared to last year, H1 FY25?
All right, let's look at the standalone results first. So just CDSL itself, total income went up from 545 crore last year to 602 crore this H1.
Okay, decent growth on the top line.
Oh, yeah.
About $72 million now.
Yeah, and net profit. It looks pretty stable, rose just slightly, from 276 crore to 280 crore.
Stable, but wait, this is where we need to, look a bit closer, right? Because of other income, specifically dividend income.
Exactly. That's the crucial bit. Reported net profit includes dividends they received, and that can be lumpy. It can hide what's happening in the core business.
So we need that net profit without gross dividend number the sources mention. What does that show?
Right. So if you strip out those dividends, the core net profit for H1 FY26 was actually 218 crore.
218 crore. And how does that compare to last year?
Well, last year, H1 FY25, it was 228 crore.
So the core profit, the recurring earnings from the main business, actually dipped slightly year on year.
It did, even with that huge influx of new accounts in Q2.
Okay, that is a nuance. So the massive account growth isn't immediately translating into higher core profit. Why? Is it costs?
It seems likely. Infrastructure, maybe acquisition costs. Something is absorbing that initial impact, and the difference in reported profit is mostly down to the timing of the dividend from a subsidiary. They got 62 crore in Q1 this year versus 47.5 crore in Q2 last year.
Got it. So standalone, top line up, reported profit stable, but core profit slightly down. Now, what about the consolidated picture, including the subsidiaries?
Okay, consolidated. Here, the story is a bit more challenging. Total consolidated income actually dipped slightly, from 645 crore down to 637 crore.
Down slightly, okay. And the consolidated net profit?
That saw a more significant drop. It went from 296 crore in H1 last year to 242 crore in H1 this year.
Wow, okay, that's a drop of 54 crore. So something in the wider group, the subsidiaries, is dragging down the overall profit quite a bit.
Seems that way. Could be investment, could be costs in those other businesses, maybe a slowdown somewhere. We need to look at the segments to understand where that's coming from.
Right. Let's do that. We know the standalone core profit softened a bit, but the consolidated profit dropped significantly. So what are the main business segments in the consolidated view, and where's the revenue actually coming from?
Okay, looking at the consolidated segment revenue for H1 FY26, it's overwhelmingly dominated by one thing: depository activity.
The core business.
The core business. That brought in Orkon 49,366 lakh, almost 500 crore.
And the other segments.
Much smaller. Data entry and storage was next, at around 8,350 lakh. And then repository activity is tiny, just 163 lakh.
So depository is nearly 6 times bigger than the next segment. That tells you where the heart of the business still lies despite diversification efforts.
Absolutely. It's still fundamentally about the depository service.
Okay, speaking of diversification, let's quickly touch on those main subsidiaries. They're part of this consolidated picture. First, CDSL Ventures, CVL.
Right, CVL, wholly owned. They're India's first and biggest KRA/KYC registration agency, plus RTA and e-sign services.
And owning the KRA is strategic, isn't it? Control over identity verification.
Hugely strategic. It gives them control over that crucial first step for any investor. It's a competitive advantage, helps streamline onboarding.
Makes sense. Then there's CRL.
Centrico Insurance Repository Limited, formerly CDSL Insurance Repository. They're an IRDAI-certified insurance repository, basically doing for insurance policies what CDSL does for securities, a move into adjacent infrastructure.
And the third one, CCRL.
Countrywide Commodity Repository Limited. They handle electronic warehouse receipts for commodities, ENWRs, pushing into the commodity space.
Okay, so diversification into KYC, insurance, and commodities. Now, the important bit, often hidden in the notes, risks and contingencies. They mention an arbitral award matter, a numerous stock and broking.
Yes, that's noted. It relates to an arbitration where there were allegations about misutilization of client securities and potential negligence by CDSL.
Sounds potentially serious. What's the status?
Well, the matter is currently before the Bombay High Court. CDSL is challenging the award. Importantly, management, based on legal advice, believes they have a strong case.
Okay.
So they've assessed that, for now, no financial provision is needed in the accounts for this period.
Right. So it's a known potential risk. It's in the courts, but management currently doesn't expect an immediate financial hit from it. Something to watch, but not a present liability, according to them.
Exactly. Noted, but not provisioned for yet.
Got it. Okay, let's shift gears to innovation. CDSL isn't just sitting still, right? They have to keep evolving in this digital market. What are some recent moves?
Definitely innovating. They introduced direct payout of securities straight to the investor's DMAT account. Simplifies things.
So there's settlements. Good.
But the bigger strategic play, I think, is the launch of their investor app with unified features.
Unified. What's key about that?
It lets investors see everything in one place. Monitor positions across exchanges, yes, but crucially, a consolidated view of securities held across both depositories in India.
So even if you have accounts with the other depository, you can see it all in the CDSL app.
Exactly. That solves a major pain point for investors. It makes their app stickier, enhances the user experience. It's a smart competitive move beyond just price.
Yeah, that sounds very user-friendly, and they're adding more tools within the app, too.
Right, like integrating proxy advisor recommendations into the e-voting system gives retail investors more guidance on corporate governance votes.
Empowering the smaller investor.
Plus, they launched an investor education website, the CDSL IPF site, in 12 languages.
Yeah.
Again, broadening access and understanding.
Makes sense. All these efforts seem to be getting noticed, too. They picked up some awards recently.
They did. Innovation in Market Infrastructure from Global Custodian and Market Infrastructure of the Year from Regulation Asia. So external validation of their operational strength and strategy.
Okay, so let's try and wrap this up. What are the key takeaways from this H1 performance?
Well, I think you have this clear picture of robust operational growth. The 16.5 crore accounts, the rapid Q2 additions, that just confirms their massive market penetration. They are essential. But the financial story needs that closer look. Headline profit is stable standalone, but the core underlying profitability softened a bit, and the consolidated group profit took a noticeable dip.
Right. Suggesting costs, maybe investments, are currently absorbing some of that growth, especially within the subsidiaries.
Exactly. Operational momentum is strong. Financial translation is, well, more nuanced for now.
Okay, so here's a final thought for you, the listener, to chew on. We saw that explosive growth, 65 lakh accounts in Q2. The question is, what happens next with the revenue mix? Will the transaction fees and other charges from these millions of new users eventually kick in and start accelerating that core net profit significantly? Or is the cost of maintaining this massive infrastructure, ensuring security, and investing in those subsidiaries going to continue soaking up those gains in the near term?
That balance between the booming user base and the bottom line profit acceleration, that's really the key thing to track going forward with CDSL.
Definitely something to keep an eye on. Thanks for joining us for this deep dive into CDSL. We'll catch you on the next one.